The Aussie dollar remains the biggest loser this week, as the post-Reserve Bank cut sell-off extends today. Further selling was seen today after Australia posted some bad trade data. Trade deficit widened much more than expected to 2.02 billion Australian dollars in August, compared to expectations of 685 million. Also, the prior month's deficit was also revised from 556 million to 1.5 billion. Australia has been in trade deficit for the whole year of 2012 so far. Today's data also showed exports dropped a massive 12.3% while imports rose 5.4%. Falling commodity prices and weak demand from China were the key drivers. Even after yesterday's surprise rate cut, the Reserve Bank is still expected to lower rates further. Markets are pricing in an 80% chance that the official cash rate will be at 2.75% or lower by February. Moody's said that it's still reviewing Spain for a possible downgrade to its debt rating and will announce the results this month. In a separate report, Moody's warned that if market participants are skeptical about the stress test, negative sentiment could undercut the government's efforts to fully restore confidence in the solvency of Spanish banks. It estimated that banks would require as much as €105 billion to recapitalize banks, nearly double of Oliver Wyman's estimate. There were still rumors flying around that Spain would formally request a sovereign bailout soon. But Prime Minister Rajoy clarified that he has no imminent plan for requesting for financial assistance. According to a draft obtained by Bloomberg, Troika is set to report to the IMF that good progress was made in Greece. Ireland's program remains well on track, and Portugal is broadly on track. Spain was also described as being well on track with the implementations for conditions for the banking bailout. Greek officials expressed optimism on striking a deal with Troika by the end of the week, but Finance Minister Stournar has remained non-committed. It's reported that Troika doesn't have a unified stance on the Greece issue. The IMF would prefer Greece to cut the debt further to make up, as it's hugely off track from the terms of the bailout. But Europe prefers to give Athens more time. Looking ahead, services data will be the main focus today. Eurozone services PMI is expected to be unrevised at 46 in September's final reading. UK PMI services are expected to drop slightly to 53 in September, and US ISM services are expected to drop slightly to 53.2 in September. Also, US will release a DP private employment report and is expected to show 149,000 growth in September.